There's another very interesting rumor that just hit the crypto scene today. And as most of you remember, last week, BlackRock officially filed for a Bitcoin spot ETF. The timing of that is very interesting. And this crypto rumor involves a traditional financial company very similar to BlackRock. Trust me, I'm going to tie everything together for you. If you're brand new to the channel, make sure to like, comment, subscribe, and of course, set alerts. Share this video, and welcome back to the O Show. Everything crypto and NFTs every day, and my mind is blown. The rumor is Fidelity and Fidelity Digital Assets will either make a bid for Grayscale, which we're going to talk about in a minute, or file for their own Bitcoin ETF. Yes, another traditional financial giant is coming into the... Let's first talk about Grayscale. Grayscale is affiliated with Digital Currency Group, CoinDesk, which I work for, and of course, they were very pivotal, well, not necessarily Grayscale, but those entities were pivotal in the issues with Gemini Earn. This means there's not a lot of liquidity there. And these companies were also heavily impacted by the crypto contagion that started with Terra Luna and, of course, Sam Bankman-Fried. And not to mention, it looks like Mr. Sammy may have 5 of his charges dropped. His case for some of these charges was moved from October 2nd, I believe, to March of 2024. Very interesting timing. Again, Sam Bankman-Fried was also the second largest Biden donor. And before he got in a lot of trouble and stole customer funds and did all these unscrupulous things, he and his team came out with potential crypto regulatory framework. Basically, worked with the blue people to give some sort of guidance on how to potentially regulate the crypto asset industry, which is very interesting because these ideologies are still being pushed through by Mr. Gensler, who was appointed into office by Biden. Again, Gensler is a bureaucrat. Nobody voted him. Biden did. And of course, Ms. Warren. So let that sink in for a little bit. We all know that BlackRock owns majority of America. They manage, I think, approximately $9 trillion in assets. And BlackRock and Vanguard also own a large share of most American companies, whether it's baby food, feminine products, meats, cheeses, I don't know, you name it. They are shareholders of a lot of these brands. But let's keep it going here. In addition to Grayscale being part of all these other companies in crypto that offer a lot of TradFi services, it would make a lot of sense for Fidelity or BlackRock or somebody to actively bid on Grayscale because they're in a little bit of financial trouble. And the timing of this is interesting. We've seen a lot of FUD in the markets against Binance. We've seen the SEC go completely off the rails when it comes to Coinbase. And remember, the SEC is going after Coinbase for their staking services. Okay? That is something that they want to heavily regulate. When we talk about staking services, we're kind of talking about Ethereum here. If you don't know this or not, in order to run an Ethereum node and to participate in that proof of stake, because that's what happens when you are a proof of stake project, you can participate in a pool and you earn rewards back for contributing to the network, similar to how miners earn rewards when mining Bitcoin. Same, but very different. Mining is a lot more decentralized. Again, remember, Ethereum merged over from proof of work to proof of stake. And this is where the Hinman emails come into play. That's neither here nor there. The moral of the story is the SEC is going after the staking capabilities. I believe they did this with Kraken, etc. And they've unjustly gone after a lot of crypto asset companies, but refused to put in any types of laws and regulations. But why is this very interesting when it comes to Ethereum? Well, there was a proposal that was put out, again, it hasn't been worked on or approved, that wanted to increase running an Ethereum node from 32 Ethereum to approximately 2,000. The current value of Ethereum right now is about $1,700 per coin, and to run an Ethereum node, you need approximately $55,000 US. Well, if this proposal did get approved, today's current market, you would need 2,048 Ethereum approximately, and would cost about $3.5 million. So if we take a step back and we think about this, and don't worry, the Hinman emails come into play too. Why would these big traditional financial companies want to participate in the crypto ecosystems? Why would Fidelity want to come in and potentially acquire Grayscale or create their own Bitcoin spot ETF? for control. And now we have this interesting proposal that comes up with Ethereum that wants to increase the limit. I don't know about you guys. I can run a couple Ethereum nodes right now at 32 ETH. No way in heck can I do it for $3.5 million, and I don't have 2,000 Ethereum. So one of the things like Coinbase and some of these centralized exchanges allow you to do is you don't necessarily have to have 32 Ethereum to participate in running a node and earn that passive income. You can simply leave your stuff on the centralized exchange and opt into a particular program, okay? But it seems like to me, these companies or the person that created this Ethereum proposal, because apparently they're having issues with the network, wanted to do this to help the network run. But to me, my mind takes a step back and it's like, okay, they want to make it even harder for regular people, non-accredited investors to participate in the crypto ecosystem. Now let's talk about Hinman and some of the very interesting remarks. In a report, JP Morgan said release of Hinman docs is a boost to Ethereum. They said it will trigger a move to more decentralization in the crypto markets. Emails tied to Hinman's 2018 speech said Ethereum did not look like a security. Also, too, the SEC met with consensus. They met with people from Ethereum during that particular time frame, which is a little bit problematic to me, and which is rightfully so why a lot of the XRP people are mad at the Ethereum people. Now, with all of this being said, I think the timing of this rumor coming out about Fidelity is interesting. Also the same with BlackRock. And didn't JP Morgan trash Bitcoin and the crypto asset industry, but now they're kind of excited about it? So if we take a step back and we analyze everything we talked about in the video, charges getting dropped for SBF, potentially, the rumor of Fidelity potentially putting a bid on distressed company Grayscale, or releasing their own, filing for their own spot Bitcoin ETF, it's a little bit weird, especially with the timing. And now that the Hinman docs have been released, I don't know. What do you guys think? My personal opinion is that the traditional finance is going to absolutely decimate the crypto asset industry, and they're going to really force us to get this CBDC. And on top of it, they're going to make it so hard for non-accredited investors, poor people, you and me, to actually participate in the crypto ecosystem. Please share this video out. Please do your best to connect the dots, and always, always search for the truth. Thank you so much for watching. Bye-bye, babes. Oh, and BlackRock is bad. Their Bitcoin spot ETF is not good. And if Fidelity follows suit, that is also bad.